Technology stocks are up more than 30% this year, yet the broader market is up just 9%. So what's really driving these returns? There is certainly something else heating up out there, and we're going to talk about that and a whole lot more right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thanks for joining us today. Really excited to welcome back to the studio my guest, Brian Mulberry, Chief Market Strategist with Zacks Investment Management. Brian, thanks for coming back. Good to see you.
Thank you so much for having me.
Yeah, of course. So right in the intro, I ran off some numbers. We see the semiconductor index, actually not even the semiconductor index. We're looking at some indexes that cover technology that are up 32%, yet the broader S&P is up about 9%. And yes, the headline numbers are correct, but I don't think it's telling the whole story.
Right.
Speaking of semiconductors, they're up a lot more, which we'll get into.
Yes.
Tell us what's going on there, Brian. When you pull apart those numbers, what are you actually seeing underneath?
Well, we have to back up just a little bit. When we started the year 2026, what we knew about the S&P 500, just a broader market, is that 80% of the market cap was made up by 10 stocks. So you had the Mag 7, you add an Oracle, Broadcom, Palantir. They have so much weight in the index. They were accounting for so much of the earnings growth and then moving the market. Those names are actually not doing as well. In fact, most of those 10 stocks are pretty flat for the year. Some are even down. Microsoft down 20%, Palantir's down even more. So those stocks are no longer controlling the market. It's everything else downstream of that that's doing incredibly well. Q1 earnings up 25% for the S&P 500. Q2 is expected to be up close to 23%, but it's all of those lesser market cap names that are driving the actual performance. So you're not seeing it reflected in the broad index, but there's a lot of good stuff happening underneath the surface.
Yeah, and underneath the surface, does that also include, in your estimation, what's happening in the small and mid-cap space? Because if you look at something like the Russell 2000, it's up 20% or so as we sit here, versus, again, it's double what the S&P, NASDAQ, I think, is up around 11 or 12% at the last time I looked. So it's still outpacing the other large cap indexes. Is that part of what you're looking at when you look at those numbers?
Yes, and then what causes that? I think there's a lot of momentum that's baked into that because there were a lot of people expecting rates to go lower, and that does have a stronger tailwind for smaller stocks. Hasn't happened yet, but there's still a lot of rotation, people selling out of their mega cap winners looking to go downstream in the market cap and find other opportunities that are more fairly priced at this moment in time. But I think it's a little bit dangerous because, again, a lot of that narrative was based around rates coming down by this point, and they haven't. So it's going to be a little bit of a volatile quarter, in my view, for small caps going forward because we're not there yet in terms of where people expected the cost of capital to go.
Right. That aligns with the views here at our UBS Chief Investment Office. Now they've pushed out a cut into early 2027 at this point. Yes. We're kind of pushing it down further and further, hearing what we're coming out of the Fed and what we're watching with inflation numbers. Obviously, that's another story that we could get into. But so if the Mag 7, which we've kind of talked about ad nauseum here for a while, and the other three that you mentioned, there's 10 stocks, if they're not driving performance, what is? When you really look at it, what's driving the performance here? And how much of that has to do with what everybody's calling the phase 1 of artificial intelligence versus the phase 2 of AI? Because that's starting to become part of the narrative that we're talking about a lot.
Absolutely, and there's no question that the hyperscalers' CapEx is what's driving the earnings growth downstream into everything else, right? Even in the small caps, what you're finding is the growth and the growthiness that's coming from there is in the more industrial materials, mining, building type of stocks. That's true of mid caps, it's also true of large caps. You're seeing Caterpillar go on a great big run. So all of that CapEx is moving from the hyperscalers downstream into all of these other pockets of revenue. In this moment, right now, you're finding the two biggest pops in the market coming from power stocks and memory stocks. Those are the biggest choke points right now in the build-out, meaning there's a bottleneck there because we're not getting enough data online from the data center build-out. We need more compute. Those need power, and they also need memory. The whole thing is processing speeds have gone up by 3 times in the last year. Memory's been flat. The important piece of it is when you're doing inference, when you're trying to get a result from data, you have to have memory that transfers the compute to the end user, and that's where we are now. So there's a huge boom in demand for memory and power.
Which also is an important part of the story to tell, because we are looking at various reports, and on average, you're seeing expected electricity demand due to these data centers that are popping up to be 39% higher by 2035, according to a lot of industry reports. And the question is, where are we getting that from? And then, there's a lot of debate out there about whether or not it's going to put more, higher bills, electricity bills for locals who might live in an area where a data center pops up. We hear China's doing interesting things where they're building data centers on the floor of the ocean for cooling. But electricity demand really is an issue. How do we continue to push the AI envelope if we don't have enough demand to power the data centers that they need to do that, especially with things like memory and pushing the technology further and exponentially higher?
Yeah, absolutely. And the result of that is you're seeing that gas turbine demand is gigantic, because most of the people that are building their data centers want them to be independently powered. It makes sense from a security perspective to not draw anything off of the grid, to be self-contained, if you will. But also, I think a fair amount of states and even the federal government's going to mandate that you can't pull power away from the general public. So that means they have to have on-site power. The fastest way to do it and the cheapest is through gas turbines. That's GE Vernova. They're sold out for the next 5 years. So a company like Caterpillar is stepping in to the power generation business. They've always been good on work sites with generators, but they were diesel generators, but they've now gotten into the gas turbine business as well. So they're just attaching directly mini little power plants to the data centers, and that business is just going absolutely crazy because of all of this demand.
Right. And I mentioned phase 1 and phase 2 of AI before, which, by the way, a lot of folks may not even know what that is. Phase 1 is sort of AI as an assistant, and phase 2 is more AI as an agent, where it can sort of think almost independently versus taking commands from the user. So and as you were talking about, that as that demand continues to increase, the power that's needed to run the data centers is going to go up. So let me ask you this question, Brian, as we're sort of wrapping up, from an investment standpoint, because we rattled off a bunch of indexes and we talked a little bit about what's happening in those markets. Where do you think investors should be thinking about as we're looking towards the future and we're looking towards demand increasing on the power side and the technology side? Where should they be putting their money to work right now?
This is an incredibly competitive market. And in everything that we just talked about, there are more than one business that are involved. And so what you want to invest right now is, in our view, what we think are going to be the more durable and more profitable companies going forward. Because interest rates have not come down, there's pressure on companies, even very big ones, that have over-leveraged their balance sheet to try and catch up to all of this demand that's out there. But at some point, that has to come back home, and it has to be profitable. So the earnings per share growth is something that we watch very, very closely to make sure that when the winners and losers start to come around, we know which is which, and we can invest that way.
Great. And it's a little quiet right now as we're heading into the summer doldrums, but I expect that the news flow will continue, and I don't think summers are going to be as quiet as they used to be with the way things are going in the markets and as technology continues to advance exponentially.
Absolutely. There's no question. There's going to be shifting winds, and we already see a rotation that's happening under the surface of this market. Just from the end of June, where we booked a really strong first half of the year, the market has gone in a different direction just in the last 10 days that we've been trading in this new July quarter. We're starting to see a lot of people take profits off of their winners, go back downstream and look for some different valuations. I would expect more of that to continue. I think volatility is going to be more the norm than not.
Brian, thank you very much. We'll get you back in here. A compelling story and one that's ever evolving. So thanks for joining us today.
Thank you.
Great. Brian Mulberry from Zacks Investment Management. And thank you all for sticking with us for this last few minutes. For more information on everything that Brian and I talked about, lots of available information at our website, ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, you can check out the studio's dedicated Instagram channel at UBS Trending. Lots of content there for you. And as always, if you do have any questions, and you may after this conversation, at least we hope this sparked your interest, make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon, everybody.